Hey guys, what's going on? So Saturday market breakdown, and we have a lot of momentum in the market this week. I think there's going to be some really good opportunities across the board. I think one of the most important things right now is just not taking your foot off the gas, but just being very patient with the right setups, not over forecasting in terms of just looking for positioning in anywhere, just really waiting for something to be very clear and deliberate and basically see it from there. So with the DXY right now, what we can see here is that if I just invert this, we've basically rejected from this value area. We've come down with momentum and we're accumulating volume. Now, the one negative I see here is the fact that this correction is much larger than the impulse, making this a little bit more neutral. However, it doesn't necessarily mean that this is ready. This is not ready to go. So the way I see it is obviously you could see it as a left shoulder head, right shoulder aspect. I don't think it's completely the gameplay. I think what we're really looking at here is, and we can be aware of this, just that little point there, that's completely fine too. And then, you know, if you wanted to keep it very simple, you could have something like that and remove all of this and just basically look at it like that, which I wouldn't say is completely wrong. But then if you miss the move, don't be upset, because you know you were looking for the absolute best area to take it. Now, from a perspective of just kind of looking at it internally, yeah, there's that 1, 2, 3 aspect. But then if we pattern separate this was one piece of its own, right? That was one piece of its own right here. And then we have to ask ourselves, is this one piece of its own information here as well? And I know that seems a bit too crazy, where there's a lot of like multiple things going in here, and then you could basically overall say, well, arguably isn't this one big larger piece of its own as well? Yeah. So I just think that right now it's a little bit more complex than it needs to be. But if you wanted to really, because you don't have the highest levels of experience, you could just wait for that to just clear this low and take continuation below here. Now, I would personally say if you waited for something like that, you'd be much better off than trying to catch any small intraday trade in there. But what I'm really looking at over here, and I'm just going to invert this back for a second, is if we call this the base and we've kind of just tapped into it there, really and truly we've done more than enough, because we've basically tapped into it once, we've come in again, but this looks more of a section 2. So it does give me that expanding feel, but I think really and truly, if we just kind of section this off for a second, this could really just be ready to go now. So if we do get one more dip low and then we start pushing higher, I wouldn't be surprised if something like that happens. So that's why when I go off and look at the counter related pairs, it's really a question of how close are we for those to shape up for the trade to be is what it is. So then when I look at it a little bit more intraday, and we are on the 15-minute here, is if I take this little wick point here, aware that we could go lower, yes, and then I look internally, I do have this aspect of a 1, 2, 3 there, which then makes you think, what if we had something like that, where over the course of market open, it goes here, drops off, completes on the 1, 2, 3, and then goes, right? And in terms of internally of everything here, that would make sense. That would make perfect sense. That's very crystal clear. So when I look at something like Euro USD and so forth, I look at where the structure is, I can see that if something like this happened, how can I take advantage of it? And I'm just going to swap over to Euro USD quickly. It would look something like this. And I'll invert that just so you can kind of see it in line with the DXY, right? You'd basically have it push up a little bit, come back down, and then maybe even come in for a 3 touch on this one, but more so you'd see something like that. We could even just scoop up, tap in there, and then just go straight for the insurance entry. But if we get a structured approach internally, that's there. You have to just remember there's so many different ways, and this is when it gets a little bit tricky, where you can draw that on, you can start drawing this on, which this one isn't really wrong. I think this one's like the most cleanest because you already have price priced in. But then at the same time, what about what we don't have already? And what if we do get an internal 123 within this 123, and then this went up, and then it completed on, let's say, this 123? Then what do you have? You have this larger pattern with the internal structure coming into it. Why would you not want to risk entry that? So that's the way I'm going to be looking at it for the week ahead for Euro USD, correlating it with the DXY. I think that is probably the best pair that I've got on watch in my personal opinion, but I think there is some other gems in there, like JP225, just an example. Obviously, we've had heavy momentum. If we're going to follow through and continue to the downside, we do need to see some sort of larger flag. If this is just going to be the one that just didn't give us any clean entries and it just went without us, it is what it is. But what I would be looking for is now, we've got this aspect for 1, 2, 3 here. I do want to see a larger flag now. Don't get me wrong, you could probably risk entry it from here, and I don't think that's a terrible trade, because you're basically still playing this to come into this area to then potentially come back up to get in the third touch. So from here to here, you could probably still get a position. So what I would truly be looking at is, if this comes up here for any reason, pushes back in, gives me an insurance entry, I won't really hesitate on that, because even if that's a 2-touch into these areas to then come back up, I can still manage it. And then even with that, I can probably still get a stop in there. Let's see what my stop loss would be. I could probably still even get in with around about 70, to be fair. And then into that low, I probably got 11. So I'll probably manage it a little bit more aggressive, around about 8%, around about these regions. Just because it could develop into a bear flag, where it's kind of got a little bit more of an angle to it. Just depends on how that top touches, because, for example, if I get something like this, then I don't know if we're going to be expanding, and there's so many variations. That's why this is a great area to be taking it, because it can evolve. Even if you get that, you're still getting out in these areas. So I think aggressive 8% is perfect for the management on that, but trying to play it into that low without speculating too much. That's basically JP225. Hope that made a lot of sense, actually, because I wouldn't be getting caught up on something like this so much. Like, yeah, it's there, but at the same time, don't. I mean, look, the risk entry is not wrong. I think the risk entry is still good there. I wouldn't get caught up on something like this for sure. I think that's just a bit too forced. I think this would make sense for a structured internal approach, unless it's very corrective. But the insurance entry is definitely much more rewarding in my eyes, because in terms of positioning, okay, you'd be in a better position for the risk entry, but you'd be taking a little bit more risk. Once you get the push down insurance entry, and if it is sitting on the hover of this, you're still in a great, phenomenal position. So that's the way I'm seeing it. So I did start filming Aussie CAD, Aussie Swiss, and then doorbell rang. So I had to go and get this package, and turns out I've got my new phone case. So I went from having this super case. I don't know if any of you have a Samsung Z Fold, or you've ever bought a case from Supercase before, but this one fell apart completely. As you can see, it just the sides started falling off. The pen part fell off as well. Luckily the phone was in great condition, but as you can see, it was just the plastic comes off very easily as well. Had to keep clipping it back in, and it was just getting very, you just don't want to live your life like this, right? And the screen was slightly getting scratched, plastic on it. So I ordered a new phone case, and this one came and it looks way better. As you can see, obviously the screen's the screen, but from the back, it looks like this. You got the phone part there, you got the pen at the top here, which is nice. Just slides out, and you can just put it back in, and it's quite stiff as well. So you know it's in there, it's not going to fall out. And then you got the slider for the camera as well, which is nice, so that your lens gets protected, but then at the same time, no one can spy on you. So I thought this was really cool. Thought I'd just share it with you guys. Obviously, if you are looking for a phone case, I do highly recommend buying a case from these guys. It says Discover Innovation. To be honest, it was a Chinese company, but I got it from a Greek company called adaptoras.gr. Yeah, adaptoras.gr. Found it on the internet. Just a blue case, match the charts. Looks good. Yeah, that's basically it. So jumping straight back into the charts, Aussie CAD. Aussie CAD looking for that larger flag. As you can see from a high time frame perspective, we did get that strong weekly push down. And what was nice about this was that because we had that weekly momentum, you can see that on the daily we had the follow through, even the evening star. There was multiple ways you could have taken it from a high time frame perspective, but truthfully you would have walked away with like a 3-to-1, 2-to-1. What we did want to get was clear continuation on the downside, and I think what I was looking for was a little bit more perfection, and I just couldn't. I was looking at other things and I wasn't really anticipating this price action because of for what it was and where it was coming from. You know, we did have so many signs of great little sells in here when you look at it now, but the problem is at the moment I was looking for more of like a 1, 2, 3 and this and that, like something like that, but just didn't capitalize on it, and it just started selling off. And to be honest, I thought maybe it would take some time and develop. It just didn't, and we saw that across the board with quite a lot of pairs, which we'll see throughout today. And these things do happen. It's just like I said, let's say you had the high here. I was looking for that to tap into this level to then go short. We didn't quite get that. Again, we took the next point down here. I was waiting for this to come back up, tap into that, come down, didn't. This one over here, okay, debatable. I could have taken the trade there, but then after that push away, I was like, well, it's probably likely this is going to develop. So if we get it, it's probably going to come into here, and then maybe even come into here, push up a little bit, and then sell or do whatever it needs to do. So I was kind of waiting for the 3 touch, didn't get it, and then it just went. So I think it's just one of those ones where you learn from it. You realize that, you know, in these runs of momentum, sometimes you just get these runs. Look at the yen pairs, a lot of them, we just couldn't really get a clean entry on it with the way that we trade. So it is what it is. But right now what I'm doing is I'm waiting for a larger continuation, something more deliberate and clear. Maybe there's an internal 1, 2, 3 in it, using this more as a retest little you know, area that we come back to, or even at most we have this point here. Obviously we have to bear in mind we are still in that run of momentum, but I think after seeing the 2 strong weeklies here, it's likely we'll probably get another strong weekly at some point. But just what I'm really paying attention to right now is that the dailies come down, the 4 hours subjectively corrective. We need to see some more deliberate price action, creating some more liquidity in the market for us to get the next move lower, and then we can play that leg low. We just need to wait. Obviously we have that gap to fill at the low, which is a great sign. So what I'm waiting for right here is this wick fill. I want to see some structure develop up here, and then we come in and fill that, and then we have a great run from A to B into that, and then we can see if we break through and continue to the downside, which I think is highly probable, but it would just really get a bit messy. Maybe so many variations of things can happen here. Maybe this develops into a larger flag, who knows. But that's basically the eyesight for Aussie CAD. I think Aussie CAD's definitely a gem. I don't think we should sleep on it. I think if it doesn't shape up this week, next week for sure, but definitely one to keep attention to. Definitely even worth, if you're not going to put it on watch, just set an alert in this area here, because odds are by the time it gets there, structure may have been ready and completed, and you'd already have planned and understood what's happening here, so you'd be able to take advantage of this. If you want to take it the one below, fine, fair enough, but you know, just have a clear game plan and then stick to it, and then see how your week goes. Aussie CAD, not one of my most favorited ones, to be honest. We didn't really sell off from anywhere major in my opinion, but what we did have is that clear follow through. These things do happen. I'm more than happy to not have been in that anyway, because this is irregular anyway. It's not the usual sort of way I make money. And what we've done now is we've tapped into that low. So yeah, there is the level of this could pull back higher, this could get more complex, develop into a larger flag, could just continue selling off. There's so many variations. I don't want to get caught up in the price action here, because really and truly my edge would be in this area, potentially in that area there, and then down here, and arguably in here, but not right now. So I would wait on this pair, truly. Even if something did shape up, I would have an edge in here as well, if but it would have to be very clear and deliberate on the 4 hour probably. But if I had something like that, where we create something like this, then you know, that is kind of more of a no-brainer for me, where I could look at that, but it's just sitting on the low. So yeah, really and truly, it's just one of those ones now where we've just had so much momentum, we just need to wait and just see how price can basically pick itself back up. Now if you are looking for an intraday trade in here and you're looking to go long, fair enough. Like, I don't think there's anything wrong with it. I just think you have to understand all the risks involved. As I mentioned, this has so much room to develop into something in this area that if this was going to go long, I would have waited for the deliberateness of that, the clear push, and then I would have waited for this. That's how I would take the long, because then it removes the subjectivity of this all being a mess and then you getting caught up in, you know, something like that, and then it goes short, for example. So that's basically the way I'm looking at Aussie Swiss. I think obviously there's been a lot of momentum, and a lot of you are probably, who didn't capitalize, maybe took a loss or missed a lot of opportunities, are probably thinking like you want to get into trades, this and that. You know, next week's going to be the one for you. Even if next week is a very slow week, capital preservation is extremely important. What you want to be doing is you want to be making sure that you're waiting for these clear, good setups. You can see that a lot of them I forecasted this week do require a bit of time, which is completely fine, because what we've had is momentum on a lot of these pairs. After we have huge momentum, you have to remember what phase we're in, and we go from executional phase to capital preservation phase. And actually, I wrote this analogy to a friend, which I'll just read out, because I think equally it's probably useful for a lot of you guys as well. So it's about a carpenter. So I said, think of yourself like a carpenter. A carpenter in executional mode, he is actively building furniture, selecting materials, cutting and shaping, and assembling with precision, right? So a carpenter is basically someone who works with wood and just basically builds furniture, maybe, you know, various different projects, houses, whatnot. When the carpenter's in capital preservation mode, the carpenter focuses on maintaining and sharpening their tools, managing their inventory, ensuring their finances are stable for future projects. But both modes are essential are essential for sustaining and growing your business, right? So you have to think of yourself like a carpenter. You have executional mode, where you're actively, you know, cutting, shaping, assembling with precision. But then you have the capital preservation mode, where you're maintaining, you're sharpening your tools, you're managing your inventory, you're ensuring your finances are stable, right? And what's happening is, think of it this way, right? If you continue to stay in executional mode and fail to go into capital preservation mode, you risk the damage of not only damaging your tools, your furniture, your building, exhausting yourself, and the list goes on, but your business won't grow because you don't take that time to go into the capital preservation mode, where you can focus on, you know, sharpening the tools, making sure you're well prepared for the next opportunity, right? Like, if a builder was just constantly working project on project on project back to back, they would be so exhausted that they wouldn't be able to work anymore. They'd probably suffer from some significant back pains and probably be so exhausted that they are not going to be able to do a great job anymore. So when they have this balance where, okay, they've done the project, then they go off, they rest for like, you know, 2, 3, 4 days, they go and basically check everything, their finances, their tools, make sure everything's charged, they're ready for the next project, then they can go off and basically not exhaust themselves. They'll be able to be in a great position for their next project. And I think one of the major important things here is that you see your trading as project onto project, and you don't see it as just trading, like I'm not just executing all the time and that's what's going to make me successful. It's that level of knowing that you're going to be executing, but then when there isn't a period of, you know, like for example, let's just say Monday, Tuesday, right? We need to see the markets develop on a few pairs. You're not in the executional mode anymore. You need to be very patient, and you cannot progressively grow if you remain in executional mode. So you need to have a balance between capital preservation and executional modes. So that's basically what I was saying. I hope you found some value in that. What I will do is I will also copy and paste what I sent inside the description of the video, just in case you want to read it, because I think there's so much value in that one little analogy in itself. And if you just really think on it really deeply, you'd realize a lot about yourself as well, that a lot of your impulsive behavior, a lot of your decision making, which, you know, may lead to over trading or even under trading, could really be fixed if you just reflected on why, and you basically just kind of saw it in two parts of yourself, where am I in capital preservation mode or am I in executional mode? And if you're in executional mode, what have you done to prepare yourself for it? Because it's the capital preservation mode that is fully preparing you for the executional mode. And if you haven't done that mode, if you haven't done that properly, then you won't be ready to execute. You'll be stuck in capital preservation mode. So there's multiple layers to it, but you need to really think about it and see it through the eyes of the market. Obviously, I've used the carpenter as an analogy just to explain it, because this particular person, I thought they would be able to relate to a carpenter. But yeah, so looking at Aussie yen, basically, yeah, large flag. I think with that momentum we're seeing here as well, it just makes sense right now. Obviously, we're seeing serious follow through. If it continues to drop off, it is what it is. But what I am looking for is clear continuation. So I do want to see something like this. Obviously, the first touch is subjective, and I'm not a huge fan of that, right? But I do understand that it's possible, because when I do look at it on the hourly, it kind of does go well together. If this comes in with structured approach or whatever, cool. I can even wait for the insurance entry on this. What would be ideal is if we did something like that, we came up, we did this, and we had that. I would be more in favor for something like this, I'll be honest with you, where I take that as the first touch and these points here. Just want to kind of point that out. But realistically, we are in a run-off momentum and we may not see that. So what I think is more likely is we get something like this, where price then does something like that, comes up, and then you get that, right? And then it becomes more of your two touch, but then again, you can use that subjective first touch to call it three. But I think that's more so of the gameplay. And then what I would be looking for internally is, okay, so we did have that also, that sort of running into it with that channel as well. So that is kind of how I am kind of looking to play it. But then I would want to see all the yen pairs pretty much lining up as well at the same period of time. And then arguably, if you wanted to, had that a little bit of extra layer onto it, you could basically say that we've come up and retested that as well. I don't think that's really necessary. I think what's really more important is that, how are we responding to this point? I think that's the most important part throughout all of this structure, is not worrying about the trend lines, not worrying about so much about the middle section, but okay, we've come up with a 1 2 3, we've then tapped into that and we've rejected. Great. Risk entry, yeah, sure, because I've got the 1 2 3 into it. Otherwise, I could just wait for the insurance entry, where we respond from here, and then even at that point there, we get something like this. I could then look to take that and still get in with probably an even better stop loss, because over here, call it around about 40-50. I'd probably say around about 50 to be safe, maybe even 40. I think 40 borderline is probably your best bet. And then to the low, you're trading about 5 to 1. But then even if you were able to get in here, sometimes even at that point, you could probably get in with about 20. You could probably get in 20, and you got 10 to 1 into that low, really, like 8 to 1. So give or take, even if you got both of them, phenomenal. I just think that second one's more risky, first one's better. It really depends on the rule of three of how we approach it. But that's basically the go-to for me. And then we have Aussie US dollar. So as we know, last week we had Aussie US dollar really selling off. Now, obviously it wasn't from anywhere very significant. That's one thing I've noticed here. But what we did have is a serious weekly follow through, and we've broken that low, which I think is phenomenal in terms of price action. And I think now we just have to look for clear, deliberate continuation, similar to what we saw with Aussie yen. Same thought process. We have a subjective first touch there, but if we can get that, come into this point, and then we can basically take it in the exact same way as Aussie yen. So I think this was a very, very easy one to really forecast on. If this does kind of shoot up higher, then I would be very patient with it. If this started to happen where suddenly you just saw price doing that, then just be aware that, what if this happened? Then would you be very much surprised that you're getting the next leg? It just means more patience, right? Where it becomes something larger. Obviously, it doesn't have to be like that. It could be the 3 touch, and then just go. But I just want you to bear that in mind, that that is also a possibility as well, where it doesn't necessarily have to be the short tight one down there. It could actually develop and become something larger, but then that requires more patience from you, because that can then take, call it around about 2 weeks to fully form, right? But then if you were patient between 2 weeks for the Aussie US dollar trade, you would have then capitalized and been in with a high time frame, and then you would have been trading into these lows, walk away with like, call it around about 12, 13 to 1, whatever. But I think for the more intraday trade that I'm looking for, because I'm not going to be forecasting 2 weeks away, is this one. But I know that if we start moving higher, there's the possibility of that larger forecast, and I just want to really point that out, because if we always keep a bias for shorts right now and we're just looking at the shorts, then we may be getting into some average to low quality positions. Whereas then if we already forecasted patience and we know that that is something we'll be patient for, that's great. And then you've got your line in the sand down here where this is your other forecast where, okay, it just drops off and you can't do nothing about it. And then you know that at that point there, I'm going to go and look at another USD related pair. These things can happen. Look at this whole run here. I couldn't capitalize. Well, there was one trade on there, right, where I could have actually capitalized in here, I'll be honest with you, because I was awake, but I didn't know it was going to drop off like that. The same thing with GBP Swiss. I didn't know those price action was going to just drop off the moon like that. But at the end of the day, you can plan and just take trades according to your plan, but you don't know if it's going to be the one that drops off like this, or if it's going to be very slow and just kind of choppy. You know, it's just different market conditions. Aussie New Zealand, I think, is a very interesting one. What I do like about this is it seems like a very AN structure, and I've seen it so many times, which is really cool, where you basically have this as the area of interest where we was looking if it taps into this value area to reject. We did have that aspect of a 1, 2, 3, but I think what's interesting about this is the first leg was corrective, pushed up. Second leg was just very impulsive, impulse correction. It is corrective, yes, but then we came up, and then as we broke above, we created more continuation, and it looks like we're moving further to the upside. So then when you look at this part over here, you can see that we've broken above, we're now creating continuation, we've had a 1, 2, 3, and now we've pushed, and we're potentially accumulating more volume here to go long, but I don't think this is the area to go long. I think anything above this ray line is where you want to really be positioning yourself. Somewhere around about here, great. That's completely fine. You can get positioned on that to go long. I don't see that being an issue. I just think that you take this in here, this develops, for some reason it drops off, taps into that, creates more of a base and goes, you're going to be stuck into an average trade. But when you zoom in and you look at it too close, you're like, yeah, but what about this? We have a 1, we have a 2, comes up, taps into that. Yeah, that is there, and if you're in a situational position to take it, then take it. Right, you can get in there, probably around about 10 pips is perfect. Even if the entry was there, and then you could probably, yeah, just take it 3 to 1 into the high, and then if it does break through, which is highly probable, you could then, you know, see that as a phenomenal position, as maybe a course of next month. Essentially, it could take about, or no, maybe not even a month. You know, that could really go. I'll be honest with you, I'd be a bit patient on it, but I'd say around about, yeah, wow. Could be a stunning trade, to be honest. Underrated, very underrated, and I think that's where the trap is for a lot of people. They'll be looking for the shorts, and then it just goes long, and then they get caught up and they're thinking, okay, and then it starts going long, and then it starts dipping, and then, you know, it just gets messy. Obviously, when it goes, which is nice, but then at times it can get very corrective, and then I don't want to get stuck into this, to be honest. But if I get positioned well enough, yeah, for sure, but then you got to hold through all of that. And to be honest, that could happen through all of August, maybe into September, but something like that is still possible. I think still that's a nice ending structure. You'd be out of the position right there anyway. And then, yeah, that's basically it. So I think this looks good. I think I'm quite happy with keeping Aussie New Zealand off, but at the same time, it does seem like one I'm going to give a double look at just in case. I might opt in because situationally I could afford that risk, and I understand it. It's just at the same time it's not the best place, and you can see obviously this structure is kind of coming off this area. It didn't completely tap into it, but it was retesting this area and then it went. So wouldn't be surprised if we saw more continuation to the upside. I think the better trade truly is up here, and I think that is one of the reasons why I probably will not put that one on watch, but we'll wait and see. Okay, so CAD Yen is actually quite a stunning one too, because what we have over here is, again, as another yen pair, the fine line difference between this one and a lot of them is that we've rejected from here. On the weekly, you can see clear follow through, which is nice. Daily, we've now broken these lows here, which is fine, or we're kind of breaking borderline, but we have wicked through it, so technically broken. In terms of a flag, we're creating it through those lows, and I think that's a very, very important point to kind of just be aware of, right? Is where are we? Where's the flag in position? Well, through the low. Okay, cool. Then we need to look at the flag itself, right? If the flag is forming, do we have a reference point we can move towards? Yes, we have this potential point here. Okay. Do we have enough data? Not really. Could this be the potential first touch? Yeah, absolutely. Comes down corrective, taps in, creates two bottoms, pushes back up, near misses the high, takes out that high, pushes back down, taps into those, creates three bottoms, maybe even moves lower, doesn't really matter. Comes up for the top, takes out the liquidity there, and then sells off. That's probably the best play that I could probably see on these yen pairs, and I think I'm very, very favorable for CAD-yen. I think that's going to be an absolutely stunning pair. But yeah, then again, this is just a forecast. It could just still come back up, come back down, create clear three touch. Could be multiple things. Could even be a two touch. I'm favorable for this one. This is probably going to be my go-to if we do get it. So I'll be waiting for this one throughout next week. Obviously, this one could shape up into Monday next week as well. So it's one of those ones where if we do get it, it's probably going to be a Thursday trade, probably, in my opinion. Thursday New York would be stunning. We just have to wait and see. But all the yen pairs will probably be gearing up at the same time. I just think when I went over all the yen pairs, this is probably going to be my most preferred one across all of them, which is completely fine. CAD Swiss, I'll be honest with you, I'm not even going to forecast on this one. I just don't like it at all. We're just coming into all-time lows again. We're just in this very corrective. Remove this. Yeah, it's just, honestly, I'd leave it alone. It's just one of those ones where, yeah, sure, you could probably make some money here and there. It's just not the one for me. Arguably, you can say something is there. It's just really not my type of trades at the moment. So whilst CAD yen, Aussie yen shape up, this is what I'll be looking for on Swiss yen. I am not favorable for putting Swiss yen as much, but to be honest, as we've seen, Swiss yen has been the most overextended yen pair. So the way I see it is, if the yen pairs are going to really sell off, which one's going to have the most momentum and which one's going to really be going? And I think Swiss yen's definitely that one. I think Swiss yen has the biggest potential to just drop off the moon and give us some stunning movement. So if I can get clear structure, I'd probably go in this one. So I'll be honest with you, if I'm going to take CAD yen, I'm going to put Swiss yen with it. I'll just kind of pair those together. But I'd say those are also my favorites. I mean, the yen pairs are just stunning across the board, JP225 included. As you can see with the JP225, because we're seeing that with the other yen pairs, is it possible we see this turn to a larger three touch? Very possible. So that's why I'm kind of just having a look at that and seeing how it develops. But it makes sense if we're looking for the short right now, right? Perhaps maybe we get it, right? We get a little push up and then it just drops, right? But something to bear in mind. So Swiss yen's definitely the other one, clear as day. You know, you can see on the hourly, everything else pretty much aligned with that. I'm not too bothered about it retesting this. I just want to see it kind of give me that. Let's just see how clean it develops, and yeah, we'll take it from there. Euro GBP, I'm looking for the lower risk entry on this one. So what we can see here is we have a clear run into that low. It doesn't really need to come up any higher than it is now. I don't see why it would. What I do like about this one though is when you do look at it from a perspective of that, has it done enough, right? And to be honest, this still has a lot of room to go. This could really come back in here, near miss, comes all the way back up, taps into these areas and goes, and you get some more if you're running channel. I wouldn't be surprised about something like that, right? I think something like that, I'm definitely for it. So I definitely want to see some clear follow through for this, and then you get your 1, 2, 3 low. Perfect. So looking at that so far ahead, how can I get positioned on that? Well, what do we have right now? So I'm just going to remove this. We don't need to see it, and don't need to see that low's been broken there. What we do need to see is the current structure that we're looking at. So we're in this particular area here. We can see on the weekly we are just following through, but it is looking a little bit choppy on the sideways movement. It's completely fine, it's very normal, but we're very close. Look at the daily close over here. Daily close is stunning. You know, even though we haven't fully retraced or anything on this, you can see that we tapped into these areas and we rejected. We wicked up, came back in, and that's pretty nice in itself. We did have a 4-hour little pin bar at the top over here, which is fine. This is more for mass psychology play in my opinion. Now, arguably you could say that there's something developing here for continuation to go higher, and I wouldn't say that you're wrong, but I would also say at the same time, just be aware of where you're actually trading into, and I think we're trading into that low. So when you look at it as a 1, 2, 3, you could even evolve this actually and argue that, is this completed, right? Because that makes sense then, right? So you take it in like that and you're like, okay, fine, why did that go higher? Well, it came in to retest this. Okay, great, that makes crystal clear sense. How can I lower the risk now? Because I didn't see that early on enough. I was looking at, you know, something like that, 1, 2, 3. Well, it's fine, you didn't take that trade, that's fine. What's next? Well, we know the next phase, the continuation. So what are we looking for? We're looking for a break below this low right here, and literally anything below it is perfect. If we can get continuation like that, we can get positioned in here. We could probably get tight, but I'd probably say go a bit extra on this one. 10 pips is perfect. It seems like one of those pairs you could probably get away with 7 and 8. I would say 7 is your borderline absolute lowest, tightest you go, and then you've got a 6 to 1 into that low. You know, sometimes I look at this and I'm like, yeah, I could probably get away with like 4 pips, 3 pips. That makes more sense to me, but I'm going to stick to what I know, and I'll go with around about 7 around about 10 to 10 on this, even with the reduced risk, which I think you'd be a little bit more better protected as well, because you're kind of taking it on the break, you're waiting for that to complete and go. Yeah, you could still take that, but there's a lot of ways you can really look at this, and I think taking that trade, you're not looking at it at that low though, you're looking at it at the absolute. So even here, phenomenal. And then yeah, with the 7, you could probably get away with around about 10% to this low. You probably want to be more aggressive in these areas regardless anyway, just in case this develops and then gives you the near miss to eventually do something a little bit more complex like a running channel into that low. But I'd be more aggressive around about 10 regardless, and I think that is great. You get in with 7 pips, you're good. You know, if you want to take 10, take 10. Doesn't really make a big difference. It's just understand that you don't get married to number 10. It could just be 7, but you know, it's there. Euro Aussie. I think Euro Aussie is actually also a very interesting one. It's just personally, I'm going to wait a little bit longer. I think if there was an Aussie pair to be taken, Euro Aussie, sorry, to be taken, or GA is definitely my more preferred one. But you can see here that we are coming into the high. So if we did get continuation over here, you could probably take it on a 3-touch risk entry. You could probably get in with around about 20-ish pips. I'd say 30 would be borderline perfect for a 4-hour entry anyway, and you could go 5. If you could get in with a refinement, fair enough. If you go 1 hour, I think 1 hour would just be a little bit too risky, because what you'd want to see is that 1, 2, 3, but then you'd also want to see it kind of come back up higher. So even with insurance entry, you could probably get in with 10, 15, but even if we got in here with whatever that is, I think that's 10. Yeah, that's 20 pips. 20 pips perfect. You can still get in for an 8 to 1 to the high, and then to the top of this pattern about 6 to 1. So still stunning. And then obviously we're not even targeting this first area, we're definitely targeting the next one above it. So yeah, you got 10 to 1 into that, and that's with 20 pip stop loss. You get 10, you do the maths. But like I said, it's not the one that I'm looking for right now. This is so impulsive. Price is just rallying its way up there. With these big weekly candles, it's likely that we at least retrace 50% the majority of the time, and I think for that reason I'm just happy to not be in it, because even if I get the cleaner setup and then it sells off, I'm not going to be surprised. So something I'll just definitely just want to point out, just be very careful and vigilant when you are taking a trade on EA. EC, similar situation, to be honest. I just think that it's in a corrective squeeze. Perhaps within the corrective squeeze we'll eventually develop some level of structure. We tapped up, we come back in, tap up, push in, impulse correction, continuation, finish the run, and then we get the shorts. I'm more interested when we tap into these areas for the entry. So what I will be doing is I'll be putting my alert on there, and then I'll be waiting for that completion. So that 1, 2, 3, if we do get it on a corrective side, and then probably continuations down here, down here, down here, and so forth. And that's the run I'm looking for. I'm not really looking for long positions at all right now. Now I understand that some people may be interested in them, but just kind of ask yourself something, right? Do you have more of an edge right now trading into these highs, or once we've got the run, we've fully pushed away and now we're in a run away from it? Where would you rather be positioned? And I think the way away, because if the let's call it the bears, the shorts are getting positioned and we're really pushing price away and we're really trying to move away from here, why would we come back? But right now, because we're coming into it, it makes sense where so many variations of things could happen, where you might even get an expanding. I don't think that's the likely scenario, but you could even turn into something like that, where you get the last bull flag into it. So many different things that could happen. I just wouldn't want to get positioned in Aussie CAD right, Euro CAD right now, but if you're getting positioned to it, I'd definitely be interested to know why and where and how and what your gameplay is. But if you're trying to get into like a 5-minute or 15-minute entry here, and you're like, oh yeah, okay, but what about this, where if we get something like this, okay, that's not wrong, but then at the same time, it's like, I'm not trying to take like a 5 pip stop loss, 10 pip stop loss into here to make like a 4 to 1, right? I'm trying to get into something where, okay, I have like a 5, 6, 7 to 1, and then it can potentially turn into like a 40 or something, or trade, which I probably wouldn't take, but I could probably get scale ins and so forth. And even if I go out, I can get repositioned. There's a lot of creativity around something like that. Euro USD, absolute gem. So we have the retest of this over here. We looked at it with the DXY at the beginning of the video. If we just go into the 50-minute for a second, so we can just isolate this whole section here. We have this element of a 1, 2, 3. If we get internal structure here, that's even better. Then we have the pattern within a pattern into that area, and I think that's something that I'm more so interested in. So that's basically what I'm going to be looking at for the week ahead. I think there's so many gems that we have this week that less is more, because at the same time you could probably start wanting to jump into loads of different trades, but you don't want to be overdoing it. You want to be essentially just focusing on the high probability setups which are in a clear run, and just position yourself well enough. Like even with Euro USD, if you look at it from the 4-hour perspective, you're getting positioned over here. If this potentially does complete on its run, where we know this, then you get positioned here for the run, and you can get into multiple continuations on the way down, as we've seen with so many previous runs. Like here, for example, you get positioned here, comes in here, get positioned there, and so forth. Right? You have the skill, you have the ability, the understanding, but do you have the patience? And if you do have the patience, you're going to make money. So just wanted to kind of point that out, where that's what I'm looking for. I'm looking for positioning in these areas, and then basically want to see how it goes from there. Euro Swiss, larger again. I just think it needs a bit more weight. It's nice that it's coming into this run, but I think if we're going to really break and push lower, let's accumulate some more volume. Let's catch some people on the wrong side who are just really impatient, and then it goes. So that one needs a little bit more time to develop, but I think if you get something clear like that, where you get a 3-touch like this, yeah, it's a no-brainer. You definitely want to be looking to go short on something like that into that low as a minimum, and then that breaks through and it continues and goes to the downside. So I think something like this would be stunning. Euro Yen, okay, Euro Yen is actually another gem, but not as good as CAD Yen. If we did get something like this, yeah, for sure, like I'm gonna be all over EJ, I'll be honest with you. I think I don't know, maybe I'm more interested in how I forecast it than what we actually get, because a lot of the time, like I love the forecast, but we just have to see. So I think this is also a very interesting one. I mean, like, you've got the weekly momentum, we just need to see how price follows through. I think actually out of the yen pairs, I do favor CAD Yen and Swiss Yen despite this forecast. I just think I drew it on really well and I like it, that's why. But yeah, you got your little point over here, you push down. If you come up with a 1, 2, 3, maybe I'll have a rescan of the yen pairs, and if I do like this one, then maybe I might opt in for it if it's there. But to be honest, it's Euro Yen, Euro yen definitely has a mind of its own sometimes. I think this is cool though. It has like multiple, you know, you've got this 1 touch, 2 touch, and then you got the 3 touch there, you got the 1, 2, 3 here, you've got the value area there. It's just got so many reasons for this to sell. And I think for that reason I probably just, yeah, maybe I'll just flip a coin on it and between that and Swiss yen. But I definitely do like CAD yen as a gem. GA, so I'm looking for a lower risk entry on GA. We tapped into this value area, we do have the one above. I just want to see it really follow through to the downside, get very deliberate. The only thing I don't like is when I usually look for a GA trade, I like to see EA kind of aligned with it, and I'm not really seeing that right now. So I'll be honest with you, I'm probably going to let GA slide. Even if it does give you the best entry in the world, it is what it is. Obviously, this is something that I just saw, like even from the daily perspective, we did wick through this ever so slightly and we pushed away. There's the possibility we fill it, and then as we fill it, you see something like Euro Aussie go higher, taps into that value area, and then it sells, and it doesn't tap into that one, it responds from this one, and then they both go short from these sort of areas. I'm just going to wait and see, and then it creates a larger flag or whatever. I wouldn't be surprised if we do get into a more messier phase, because look at this, for example, right? You had the impulse and then look at all that. You had the impulse and then look at all this, right? Well, now we've had the impulse. Is it possible we go through all of that? Yeah, it is. So I'm not going to let that put me off trading this particular pair, but I'm fully aware that this is the territory where I don't want to really be jumping into trades so quickly. Okay, GU's gem as well. I just don't think it's a similar forecast in the sense of EU, AU, and EU, AU, sorry. Only because there's not enough data for me to really draw on the structure here. I just wait for a clear push down, continuation in short. That's all I'm looking for. Keeping it so simple. I don't want to overcomplicate GU. I think GU's follow through on the daily looks absolutely flaming good. Perhaps maybe if you want to argue there could be continuation from that daily high there and then it just continues there. I'm not really too bothered. I just want to see it kind of just push lower, give me continuation, I'll go short. Overcomplicating it is just going to be a bit of a headache for me. So if you want the overcomplicated trade, then this is what you'll be doing. You just be looking for that to come in for the floor. You see it come in, taps into this section, and then perhaps you get your 2 touch, or it comes in, taps, near misses, comes on again, and then it does that, and then you get your 3 touch, right? And then you can take your trade there. Cool, that's not wrong. It's just I'd rather focus on EU. GU there, that's it, simple. GBP CAD. So GBP CAD is actually not a bad one either. I just think it's there, it's in that area. Arguably you could say 1, 2, 3 is this and that. I'm just not too bothered about it. I'm not looking for a GP CAD trade at the moment, just because you have this high, you have the high above it, subjectivity, we're squeezing towards it. What I do want to see is just clear response. What I would like to see is by next week, you know, we've done something like that, we've pushed all the way down here, and then I can look for something like this, right? Probably, in fact, actually, I would probably keep this one on soft watch outside, because Monday, Tuesday, let's say we tap into these areas, Tuesday evening, Wednesday we're back down here, and then by Thursday, London session, maybe we get a trade in there, whatever. That's what I'm going to be looking for. That'll be more for a Wednesday, Thursday play for me, but something I'll definitely keep on there. I don't really check these as much because there's so many pairs to have on watch. I just don't want to overdo it for myself, and then if I did take a trade like this, what trade will be here? Call it 20 pips, even into that low. Yeah, I've got about 6 to 1, so it's okay. It's okay. GP Swiss, similar to the other Swiss pairs we were looking at, Euro Swiss and so forth, just larger flag now. I'm just looking, so there was that head and shoulders aspect there, push down, larger flag, continues, fills that gap, comes to the low, and then we push up high again. Very simple. I love this actually in the sense of, if I can measure that in there, yeah, that makes sense. That makes crystal clear sense. So something like this is great. I think this will be more so of a next week play for me. But yeah, definitely, yeah, I don't need to look at that. GBP Yen. This is another one I could have easily said I would put on watch, but I'll be honest with you, I don't need to. So what I'm looking for is two bottoms, clear structured approach into the third touch, pulls back up, taps into that area of liquidity above. What about this wick? Not really too bothered about it. I do want to see some sort of something. But yeah, so 1, 2, 3. If it does respond from here, fine. You know, then I won't take the risk entry there. But if I did take the risk entry here for whatever reason, my protection would be above here, where that's in some ways could seem so large because then I've got a 3 to 1 to the low. But then you zoom out and you look at it and you're like, well, is it? So it is large. It's very large. Insurance entry all day. I think from there, insurance entry, if I was going to put GJ, it would be a definitely insurance entry type of game for me. But the 1, 2, 3 looks great, and then extension pushes up, tags into that liquidity and goes. Yeah, that's basically it. It's more than enough. Yeah, so GBP yen, I'd probably just look for that. GBP New Zealand, likewise, I think I'm just going to wait for that strong push down. I'd wait for the second continuation personally. The first continuation's there, I think. Definitely want to. Actually, I would consider that. I'm not going to lie. It's just I need to see that daily time frame. I want to see that close. I want to see that come in, and then I'd probably start positioning. So this one could be more of a late week one because, you know, market open, probably just go straight up. Let's say as an example, doesn't have to. It could take 3 days, could take 6 days, could take a week, could just be 1 day. Opens, pushes all the way back up here. Next day is up here, and then next day it just drops. And then Thursday, Friday we're formulating and we sell. These things happen. I'm just more inclined to wait a week, let the weekly get involved, and then I can get positioned accordingly. New Zealand pairs now. This is nice. Again, New Zealand US dollar. Even though we're at this low, we've had huge momentum, honestly, and it's just one of those ones where if we can get an internal 1, 2, 3 into this sort of area, obviously being aware that we could get a 1, 2, 3 here, I think retesting the back end of that because it's so close is also very possible. And then you basically see it like this: internal 1, 2, 3. You see the retest. You had that level there. Liquidity was taken out. And then boom, just kind of sold off, and then you get your risk entry in there or insurance entry on the AFT side of things. I'm just more preferred for EU, but I'm just saying NU could be there as well. New Zealand CAD, definitely another one. You know, we have this larger flag in this area. I think this could just get more developed and more complex. But if I was going to take a trade, it would be like this. I'd probably get this here where it near misses this high, and then it comes back up, takes that out, taps into that area of liquidity, and then just sells. I would be inclined for that, but then again, this is the sort of territory where it just could get complex. And look at that momentum. We just want to see something very deliberate and clear. Looking at GBP CAD as well, you know, it's one of those ones where this is just very close to its value area as well. If that's going to just really sell, who's to say that this won't just continue moving higher, stall, and then basically just consolidate and create something larger and deliberate, whilst other pairs like Euro CAD, GBP CAD are getting into those areas. So definitely the CAD pairs are gems, like proper gems. I think it just, you know, it's one of those ones. Look at this is the Aussie CAD one where we're looking for that large continuation. So if we look at New Zealand CAD, why would we forecast something completely different? It needs to be in line. So as I said, so many different variations of what could formulate here, but it would be continuation territory. A larger 1, 2, 3 without this objective first touch would probably give it enough time and weight for this to be solid. So I'd be coupling New Zealand CAD and Aussie CAD, which seems to be a commonality for a lot of pairs, and then looking at the rest of them separately. But that's basically it. New Zealand Swiss, I'll be honest with you, I'm not really going to touch it. Look at this, we've tapped into this area of liquidity, call it a squeeze with a 1, 2, 3, whatever you want to say. Taps into that, sold off rapidly, and now we're tapped into these lows. It can just keep selling off. We're at all-time lows, really and truly. We've created an all-time low there. I just don't want to get involved in this. I'm going to leave that one completely out. Really up to you. If you want to take it, you can take it. If you want to go short, go long. I just think you're in a very risky area right now. New Zealand yen, okay, this is absolute stunning. In terms of a weekly close, I don't think, you know, it could really symbol much else in terms of solid rejection from that area. Then if I go in and I look at it on the weekly again, solid 1, 2, 3 huge candles. This could just be an expanding on the low. It could be so many things, but you have to realize that we're actually on the low on this one. I don't know what to really forecast here. I'm not going to over forecast because, and again, I think this one's just very underdeveloped. You could get something like this. you know, and then boom, you get the sell. So many different things. So I think over forecasting on this one's just not really the one. I think wait for more data. Once you have a little bit more data in place, you can really tell what's going to happen. If these just for any reason start to pull back aggressively, then yeah, you've got a clear message that, you know, it's not the one. But just wait. I think if you want to put New Zealand yen on watch, it's probably one that you probably wait till like Monday, Tuesday, see how price is developing, what price is really giving you on a Monday, and then you'd be ready Monday evening to really put that in the forecast. So I think this is a smart one to just kind of be a little bit more patient with. Okay, USD CAD. USD CAD is at this value area. Obviously, we do have multiple areas above it. That near miss to fill eventually as well. With the DXY moving long, I'm just not too convinced with a USD CAD short. I'm just going to be patient with this. I'm not looking for anything just yet. This was quite an interesting run. I think if I did, you know, really spend some time looking at it, there was quite a few trades in there. Just like I said, it's not been the cleanest. There's just been so much mess. Honestly, like one of those ones. Sometimes you get great sequences, sometimes you get corrective, messy ones, and for me this was not the cleanest. So if you're looking at the shorts here, you're not wrong. I just think that you'd want to see something very clear and deliberate. Remember, we're looking at the other CAD pairs as a whole. I don't think something that large for sure, but you'd want to see like a clear follow through, break below this low ideally. Price, you know, does whatever it needs to do up here. Let's say it just does all this, and then eventually it comes in over here. When it starts giving you something like that, you can then get positioned for shorts there because you'd be aligned with everything else, and then internally you'd be like, oh yeah, I understood this, you had this, and you know, all of this stuff. But like I said, it's way too soon for me on USD CAD. I'd much rather wait, even if we were further in the run. You know, we've had the first continuation, second continuation, and so forth. This is really the ideal position I want to be positioned in here. Is okay, you didn't get the entry there, you didn't get the risk entry up there, whatever, you didn't get that trade, that cleared the low, and then now you're getting this one. That's where I would want to get positioned in, because I'm pretty deep into the run. The weekly's probably in, the daily, the 4 hours probably in. Now I just need to get positioned well enough in there, and there's a lot of data to support a short aligned with some of the other GC, EC, etc. USD Swiss, I think USD Swiss longs are actually on the table. I think this was unfortunate, this sell-off. It was looking really good for the longs until we had that bit of a sell-off, but I think now the case is what happens over here is it's one of those ones where do we get something like that? Possible. I think this is extremely possible, and it's a bit off-putting as well, that if you got something like this, you know, that would make sense too. So I'm going to leave USD Swiss off because it's very subjective. I think where I would be looking to get long is if this has been cleared and we're up here somewhere and we're creating this, I could get in long for that, because it's basically cancelled out this whole corrective move to the downside, and then you've come up, you create a new continuation and moves up higher. USD yen, I'll be honest with you, I'm not a big USD yen fan. I know some of you might be loving this right now where you're seeing strong push away. It's just with the DXY going long and this and that, I just don't know too much about this being the one. There's better yen pairs there, like CAD yen for example, but yeah, same situation. If you got something like that, you could look for the short. But sometimes USD yen has its own brain of its own, and you may get this, and then what happens is it comes here and just pushes higher, and the other yen pairs go short. That is possible. Just want you to bear that in mind. USD I don't think there's much there, to be honest, as well. So that basically covers the currency pairs. Now, a quick sweep through the indices. You can see over here that, you know, looking for more continuation, push, correction, push, correction, push, next correction, and do we continue going lower? It's possible. It's possible we can still come back to higher value areas, because we have to kind of understand that a lot of things can probably develop. I don't think that's your angle, but you know, with the SPX, we know that it's not one of those pairs that just keeps shorting for a long period of time. Like, we do get those declines, but then when it gets bullish, it gets very bullish, and As we get deeper and deeper into this run, if we don't get clear and deliberate price action, then you don't really want to be jumping into it. There was an interesting trade over here where it was shaping up around about the evening. I didn't take it, but looking back on it, it was definitely there. I did get more off a AFT entry on a USD, which I'll go into after. But yeah, there was that. And then I was looking at the trade up here. I just decided not to take it for personal reasons, but it was there. JP225 probably taps in here, gives you that. We went through this, and that would be the trade there. Aussie 200. I'll be honest with you, you could say this looks great, but it just isn't. Really and truly, that just isn't great. Not something I'm looking for right now. I don't think there's anything to really trade on here. You could look at further upside continuation. I think it's a waste of time. What I did see was kind of, look, we had this gap, we've now filled the gap. Are we going to then just sell off from here? And that's totally possible. It's just, I don't want to be getting caught up on some average positions when we had so many other things that I showed you on the currency pairs. The Germany 40 on the other hand actually looks okay. So if we get clear deliberate 3-touch continuation, I could be looking at this larger higher time frame expanding. Now obviously this is corrective, this is really something else, right, where you've got this sort of very corrective price action. But even so, if you separate this and you look at it as a 1, 2, 3, we did respond to this low, we've pushed away, first correction. Now we're looking at a continuation to the upside, even into this point here alone. If you can get a deliberate 1, 2, 3 in there and get positioned in here, right, first profit target would be the ultimate level of this, which would be, call it 4 to 1. And then if you look at that point, little point there where you got 10 to 1, but then more so you got 18 to 1, that's obviously 10 pips. Right, if we're looking on this pair, call it around about 17, seems a bit good. You still got around about 12 to 1 on there, depending on how good you are and how you trade. You know, you could probably really capitalize on this. So that's a hidden gem actually, really and truly. If we can get clear structure there, I'd be all over that for a long. UK 100 is interesting because we've kind of completed on this. It's just been very impulsive and I didn't really like it too much. I mean, yeah, you could argue there's impulse correction continuation. I just think that if we're responding from there, then I would want to see something weighted right now, and I probably would want to see this where price then comes up, even taps into that level there, retraces, and then we get more for AFT sort of 4-hour play on here. I think that could be an interesting one here, and you see that. And then basically, if I'm just going to put it in here, I basically then take the trade right there, set the pending order, stops above. I'll probably even squeeze it a bit tighter. You know, if I could, I'll probably go around about, call it 22, 20, and I'd probably take that trade 10 to 1 into that low. That is probably how I would look to take it. I'll be honest with you, from a high time frame perspective, you'd see it like that, and you'd be like, whoa, shit, okay. So that's a game changer. I will personally just do this because I want to take it at the extreme. I'm not going to take this trade on that 1, 2, 3. I'll take it on the extreme where it taps into that little wick above. Then I'll be looking for it. So I'll put that on there. In fact, I'll put this ray line just a little bit lower, just so I'm alerted a little bit sooner. And yeah, that's how I'll look at it. US 30, again, another gem, right? We've got this area of liquidity. We've now scooped up, we've tapped into it. This is a great area for price to just decide to go short, right? But at the same time, I would want to see clear insurance entry, so I would wait on this. I know there could be a trade in here, I just don't want to be the one to take that and then, you know, miss the message. I'd want to see clear follow through now, so let's just say it does that and it drops, and then we get the next continuation, which most likely, knowing this pair, could be quite tight and short, and then we go. Right, and I think that's the one where then I get a clear message from the market. We can see that we responded from here, we pushed, clear deliberate continuation, and we went short. That is how I would play US 30. If US 30 continues to go long, then I'd leave it alone. But if we did get that clear rejection and then a tight flag over here, I'd get positioned in that for the short for sure. And I wouldn't look for perfection at the same time as well. And then if this ended up being like a proper gem and just started really going, you'd be positioned so well. So Again, another one to consider. I do like US 100 a little bit more as well though, because if you look at it from a higher time frame perspective, okay, great, we are coming from higher value areas, we're getting serious follow through. We then look at it on the 4 hour, and if you look at it on the 4 hour, what you can see over here is that you've cleared that low. If we get clear deliberate 1 2 3 continuation over here, you can get positioned phenomenally well. And yeah, essentially yeah, you'd get in for a decent position. Even to the bottom of this flag, you walk away with like a 2 to 3 to, no, 3 or 4 to 1. Yeah, so yeah, 5 to 1 to the bottom of this flag, but then you'd be playing an even larger move into that low there, where you'd probably be walking away with a 10 to 1 at a minimum, but getting positioned so well. So again, that's another one to be looking at with the US 30. I think I prefer the US 100 over US 31 right now, just because that's more of an aggressive play. But US 100, if it gives you it, gives you it. If not. Commodities, gold is sick, man. I took gold on the 4 hour entry right up here. Right, I got a 4 hour entry in there. Probably not this one, because I looked at it on different data. Don't know why I still have this one on. I just like the word. Got in there, got out for a decent percentage, 5 to 1 or something, and then I was able to get in on this little trade here as well, where you had this section here. I got involved on more of an AFT entry over here, so I basically had it there, got involved in this section, stops just there, and then I drove it into this low here, and then as it pulled back, it just took me out. It is what it is. But took a profit, and then it did kind of just triple off. But it was one of them ones where it's like, okay, well, this is going to be the continuation, it's going to go, and then it's going to kind of move away, and I'll be well managed into that. So either way, that's where I was happy to get out of the market. It wasn't supposed to be a short-term move, but I was aggressive with it because I understood the risks and where it was, it could really evolve. And as we're seeing now, this makes sense, right? Okay, we are technically at the level of the retest of this. If we come back down and we come back up for a more of a bear flag, sorry, and then let's say that we just tap into this area of liquidity there, great, I can get positioned again in those areas for a bigger move short. That's what I'm looking for. Would I look for a more weighted time frame? Absolutely. I think even a 4 hour entry play could be perfect in these areas for me, but I think even the 1 hour is still stunning, so it'll be between those. Silver, I think silver are more favorable over gold at the moment, just because what's happened is, if you look at it from a daily perspective, right, all-time highs, we've now broken that low, basically eliminating all the forecasts I had for continuation to the upside, which is nice. Now I'm just looking for very deliberate continuation below there. Like many people, I would like to see this kind of come in, 2 bottoms, comes back up, fills that little gap there which near missed that high, comes up, and then get the risk entry in there and go. With silver, it's probably likely that even if you got something like this, you'd have to read through it. So just something I want to bear in mind, that a couple times I've taken trades and something like that's happened. That's not invalid. It just means that it just kind of just pushed out higher. So I would definitely be on the ball, but if we did have a clear structured approach into that, that would be phenomenal. So that's what I'm looking at. Silver, I think that's going to be a gem of a trade as well. And then just to kind of clarify on management, yeah, you're good. You could probably even walk away with 3.5 to 1 to the low of that structure, and then onwards it just turns into stunning price action. Okay, natural gas is just basically tapping into the low there. So is it creating a base, or is it going to break through, create more continuation? You just have to wait and see. US oil is interesting. I just think that that's not the best area in the world to be looking at the trade. I think if this is going to be going anywhere, it's more so going to probably drop off, go continuation, and then it just sells, and then you're just sitting there like, okay. So it's not a reversal, it's a continuation to the downside at this point, and it goes. So you don't want to really be trading against it, because technically you could argue that this is the trend to the downside right now, right? But then you go on the higher time frame, it's very sideways. So what are you going to get caught up into? Would you get caught up into this, or would you rather focus your energy on something like Euro USD and so forth? So that's what I was really just asking myself, and I realized that I'd rather leave it. This is interesting. At the same time, I just think that I'm not a huge Palladium fan because of swap spreads on it. Never really been on the favorable side of it, so haven't really been able to capitalize on it as much as I would have liked to. Continuation on platinum looks actually decent. So you've got the low down here, you've technically broken this low, which is nice. And then now in terms of, let's just say, retesting this, yeah, you could even be looking at something like that, where you come back up and you tap into that and just short, and then that's your flag, right? Could even develop into something a little bit further, but that's basically what I'll be looking at. So yeah, I'll basically be looking at it like that. Would I take platinum shorts? Let me have a little size up. I think it could be okay actually. Positioning could be good. Yeah, platinum shorts isn't terrible. Could actually be decent. I always put platinum on. I never take the trade though. I'll just have a little look. I think copper is also a very interesting one. Underdeveloped, but if you got it and it just kind of went like that, then you had this eventually or something. I don't know. There's so many variations of what I could really say. Oh, there was a copper trade in here as well. I didn't mention that. So we basically had price push there. You had the 5-minute or 15-minute, I think it was, over there, and then basically you had the trade. You'd have ultimately run around about 20%. Easy to manage. Over here, you would have run around about 10%. You would have been a little bit more cautious though, but you probably would have been out for about 9% on that anyway. But if you were looking at the longer term move, then yeah, for sure you could have really held this pair if you wanted to. I just would be out for 9 personally, but yeah, this has room to just really go to like phenomenal numbers. Cocoa, corn, wheat, and soybean. Nothing is interest there to me. BTC on the other hand, definitely on its bull run, which is nice. 1, 2, 3, pushed away. Clear continuation going into upside. Very easy to pattern separate on and really understand. But yeah, ultimately, these were the instruments that I liked in the end. So I will go over them again tonight, in the afternoon after my gym session and beach session, and then what I will do is tomorrow I'll formulate my Sunday market breakdown and I'll make a video for that. So most likely these are the pairs. I'll go through my currencies and indices one more time just for a quick filter through to really decide on if there's anything there that I will take a second choice at. I think, definitely these CAD pairs are one that I think maybe EuroCAD, GBP CAD, one of those could make its way on. But yeah, I think besides the rest, I'm not too fussed. I will just kind of give them a little bit more of a chance. But all in all, hope you guys have a phenomenal week ahead. I don't think there's much else to really discuss. I think definitely one of those weeks you need to really practice your patience on. There'll be trades, it's just you need to wait for the structures to develop. If you start trying to jump into any old trades, you run the risk of ruin. So capital preservation and executional mode, right? Those are the 2 points that I think are extremely important from today's video, but I will post that in the description below as well. So guys, hope you enjoyed the video. I'll catch you guys in the next one, and if you haven't already, hit that subscribe button.